Good morning, everyone. It's Ben Buckner and Dan Bossy with Ag Resource Company in Chicago. It's Wednesday, May 7th. We've got markets higher almost across the board. That includes ags and financial markets. Dan, I think today is a macro Wednesday. We've got a lot of seemingly positive, fresh input. It really just in the last 12 or 14 hours in the grain markets are adding premium, expanding conflicts in the world, but also I think most importantly, and what's driving CBOT prices this morning at least, is the U.S. scheduled to have talks with Chinese counterparts in Geneva, Switzerland next week. And that includes U.S. Trade Representative and Treasury Secretary. So these are going to be pretty high-level meetings. You know, as we've talked before, trade issues are going to be lengthy. It's going to take time to solve. There are a lot of complications, but we are moving in the right direction. So what do you think this morning?
No, I think you're right, Ben. As you see the headlines here, I mean, late yesterday evening, the news came out that the Chinese and the United States would be holding high-level talks in Geneva, Switzerland. Those talks are to start on Saturday. I would imagine what will come from these talks will be a sharp drop in existing tariffs, maybe as much as 50 or 60%. These tariffs that have been mentioned many times by the Secretary Treasury Representative are unsustainable. I mean, it's an embargo on trade. And so when you think about the harm that's being applied to U.S. and Chinese economies, it's rather severe. So look for those tariffs to come down and then maybe a framework for future talks. I don't think you're going to cut a deal at these meetings. And in the background, the biggest fly in the ointment in all of this, if you will, is the request from the U.S. government that China make good on its phase one obligations. That's $80 billion. Now, China can buy a lot of energy from the United States, crude oil in particular. That would be one way to get through that. But again, I believe these trade talks will be lengthy. I think they're going to be extended, but at least we're talking. And so that's the good news of it. And it's transformational for the outlooks of the ag markets. In other words, if we do go back and do a trade deal, we would be looking at, something that's importantly positive for U.S. farm income and for agricultural purchases. The chart on the left here indicates Chinese purchases of grains globally. And so notice this year we're falling to about 112 million metric tons. It's down from, 140 something several years ago. The Chinese have been very slow to buy corn and wheat. Though, again, they're buying soybeans. We think the USDA is too high in their soybean estimate at 109. We're more in a 102 kind of range. As you look at the chart to your right, that's the value of U.S. ag purchases. And so after that phase one agreement in 2020, we did see China step up and buy, between 40 and $30 billion of U.S. ag goods. That's demand that's domiciled just to the U.S. market. So again, very, very important. And would it change the outlook of the agricultural commodity markets completely? We also have in the news that India has struck Pakistan. Of course, this is not unusual. Historically, these countries have not got along. Of course, we had a tourist attack several weeks ago that was seen as something that India wanted to retaliate against. Now we have Pakistanis talking about retaliation against India. Where this all goes, I'm not quite sure. But again, these countries do not like each other. They've been at war many times. I would imagine that escalations of tensions will lead to some uncertainty in the world. And with a war in the Black Sea, of course, the Middle East, and now India and Pakistan, this just geopolitically raises the stakes, especially with the United States kind of targeting Tehran and the Iranians in terms of what's forthcoming. Then if we turn back, and the markets have been down this week before today on supply-driven items. It's been favorable weather, and that weather pattern hasn't changed. So although we'll have a rally today on geopolitics, in the background is still good weather, getting seed in the ground, above normal temperatures, and what looks to be a favorable start to the Midwest growing season. In fact, if you think forward, the only really concerns we have today is maybe a budding drought across Europe. I think Europe is one of those areas we need to be paying close attention to, especially Northwest Europe. Ukraine and Russia at the moment are getting enough rain. Look for those areas and crops there to continue to improve. But I do believe that we need to put Europe on our agenda in terms of watching for problems going longer term. Now, Europe will also be very, very cold with frost likely in countries like Poland, maybe all the way down to northern Romania, stretching eastward into Germany. But also notice how dry it'll be. So there will be patchy rain, but it is going to be a problem longer term. So, Ben, as I stand back, it's a yin and yang day between favorable U.S. weather, what's going on in terms of U.S. and China, and then in the background will be these other global supply issues in terms of Europe. But I don't think we're going to see the markets break hard nearby until we get beyond the May, let's say Monday's May crop report.
Yeah, I think that makes sense. And here at Ag Resource, we've kind of already fast forwarded to initial corn, soybean, and spring wheat ratings. We're kind of over the planning progress. It's going to be very fast. Those ratings will be above average. I think that is guaranteed. But to your point, we're not without threats in the world. And so, one of the theses we've got longer term is we still need big crops in the Northern Hemisphere this summer. So I think it does make sense for the markets to kind of pause on the downside. Let's assess what's happening in China. Let's assess, what are the odds that European rainfall resumes? Does it rain in, the northern plains of Canada, and at what point? Just a lot of uncertainty, more questions than answers, and we've kind of checked off planting progress already. So, yeah, I think stability here, yin and yang, makes a lot of sense. I think both the bulls and bears probably struggle for meaningful leverage, but it's all trade deals, and increasingly the details of weather forecasts that are updated every 6 hours as we get into the growing season. So I think that's where we stand in the markets today. Dan, do you have any final words?
No, I think that's it, Ben. We've got demand hopes below the market. We've got supply bearishness above the market until there's a bigger weather problem. And I think that kind of characterizes where we're at. Hopefully everybody has a great Wednesday. Ben and I will be back tomorrow, and wishing everybody good trading on here May 7th. Be well, everybody.
Yeah, all the best.